Hello everyone, this is Teddy Keckstaff of Forex Trading Unlocked, and we are here today on July 6th for a Forex trading and cryptocurrency analysis for July 6th through the 9th. And before we get into it, I just want to remind you with our disclaimer that this video is for illustrative and educational purposes only. If you have not done so already, excuse me, please check out the book High Probable Japanese Candlestick Patterns. We will be talking about some of them in our analysis today. And you can check that out on Amazon.com. It's available in paperback and Kindle versions. If you are an Amazon Prime member, you can read it for free because you're already part of their reading thing. You know how that works. And also, if you have not done so already, please subscribe to our YouTube channel or Twitch channel, Forex Trading Unlocked. And with that, let's go to our live action screen where we actually have our YouTube channel pulled up. You can see that from this here we have a bunch of different uploads that show you all the current videos. We have created playlists, featured channels, etc. Please check it out, subscribe, show it to your friends in the Forex and cryptocurrency trading community, and lots of valuable information here if you poke around. And if you are a Twitch fan, please, if you have not already subscribed and you're watching us do this, check us out here. We are in a video loop here, so let's go to this. Oops. Okay. All right, so we'll pull up the Twitch real quick. So Forex Trading Unlocked on Twitch. Here we go. Now see it goes into a mirror effect, so we have to pull this one off because it is broadcasting live. I should have actually logged out. In fact, that's what I could do actually to show you guys, but we'll do that at the end. All right, so we have the forex-trading-unlocked.com website pulled up, and we already have the workstation pulled up also from the navigation bar. And here we have the dollar index chart. You can see that yesterday there was a little bit of trading in the currency markets, taking the dollar a little bit lower. Friday we had this little sell signal after we had made a higher move high. Be careful, this is a counter trend signal right now. So right now, as you can see, since the beginning of the summer going into the end of the second quarter, the dollar has been in a nice rally mode, making a correction to the upside. Now we've been coming off of a higher move high. The critical level to watch out for as far as major support would be this last low here from a few weeks ago around 91.52. So as far as how much of a pullback in the index, remember that as far as the index is concerned, this helps us to figure out where the euro and the pound especially may be going because of the fact that they are the two biggest components. So we'll pull up our 50% rule here from our recent low back in June, and we're coming back here. So if we fall below 91.52, I could see us coming down to this 91.42 area and find some good support. This is about probably as far as we are going to see as far as a correction is concerned, should this dollar break continue to move into the next week or so. Remember, we're coming out of holiday markets. We are now in the beginning of the third quarter, and it will be interesting to see what happens along the way. So since we have this beginning breakdown going on here, we're now going to go into our major components of the dollar index and see if they will somehow come into play here when it comes to this little area right here. Okay, so let's pull up the Euro US dollar. Euro US dollar. All right. So what is going on here? We have a little bit of actions on today's trading here. We've spiked up just below $1.19. We're near the lows of the session. However, we're coming off of a higher move, another higher move high over the past few sessions, getting rejected. As you can see here, we had made this low. We made a lower move high. Last week we had made this lower move low, and now it looks today like we're making this lower move high right here. So I think a good area as far as like if you are an aggressive short would be to play off of today's high, maybe give it a couple pips of risk. For sure, anything above this area here, this last lower move high at 119.75, changes direction for the Euro US dollar. So remember, this has been breaking down just like the dollar index has been railing. It's an inverse relationship, the dollar index to the Euro US dollar. And now here we are coming to kind of maybe scratch out a bottom here. Looks like it, perhaps. However, remember, the trend is your friend. If you continue to make lower move lows and lower move highs, the trend is bearish. You are on the wrong side if you're trying to buy into it. Right now, I would say look for a valid buy signal before you really try and fade this trend, just because of the fact is we don't have even any signal to give us a neutral bias yet. Something that may do that would be, say that tomorrow or into the next few days, if we bobble around and hold support and then make a move back above this $18.99, then I would be leery of being short. I think you're going to definitely see a squeeze play above this level should we get there, just because I think all of your weak shorts that are trying to ride the bottom of this trend will start to scramble, especially as you get closer to 119.75, which I believe if we do get above that, that will start to send the momentum to the upside, definitely in favor of that kind of a trade. And how long would that last? Well, let's go back to the dollar index real quick. So should we put the brakes on and continue to move higher with the euro US dollar potentially, then that would help to guide this dollar index down towards here. So we have a little ways to go for that trade, which would then give, like I said, the euro US dollar some room to come up to this $19.75 at the very least. Should we get above that, then I think you would be heading towards that dollar index type of correction area. We'll go for the 50% rule. So just let's say that both of these markets have turned. Okay, so for hypotheticals, we're speaking that if the market has turned and the dollar index is going to continue to go lower, then that would stand to reason that right now, especially if you are an aggressive bull against the low from Friday, here around $18.06, maybe you'll risk a little bit below there. If you're an aggressive bull trying to get in front of a trade higher, this would probably be a very low risk area, because if you think about it, we're trading at $18.26, so you risk about, let's say, 25 pips for a rally up to, which if it takes out the high of today, we're looking for at the very minimal 119.75. So you're risking 25 pips to make 150 some pips at the minimal, and then obviously with $1.2033 being our ultimate objective over here. This is where I would say that you're probably going to run into an issue, would be once you get up to this $20.33 area. This would have you in that same area as the dollar index. And should that be if this is just a corrective move, I would say that resistance will come into play here for the euro US dollar, and also support will come in for the dollar index. So let's see how the British pound US dollar is shaping up as well. Looking rather similar. This one is acting in the same fashion. I would key off of the low from Friday as well as the high from today as far as a breakout of to either the upside or the downside. Should we fail from this $37.30 area, that would mean that the euro is probably also under pressure, and its strength is coming back into the dollar very fast for whatever fundamental or technical reasons that may be. So today we can see that we were rejected. However, we are coming off of a lower move low. Today's high is still a lower move high in the grand scheme of the trend, which has been lower, especially since we're back on support just above the lows of the day and down on the day with only, well, we're just into the mid-morning. Remember, Europe and Asian markets are now closed, so now we are just in the U.S. trade, which even though we are over with the holiday, remember there's probably a lot of people on vacation. We probably have some skittish volume. As far as interest in the markets, I don't think you're going to have much over until probably the next week or two. So this week we'll have to be watching out for some of the economic numbers and stuff. Unemployment claims on Thursday definitely aim to be something that will most likely give us something to look at and see if we can get some new swing points going on. So, but right now the trend is your friend. I would say aggressive shorts right now. Be careful above $1.3903. Should we get above there, then I think you could have a continued rally over the next few sessions up to somewhere around this $39.91 area as far as the 50% rule with Fibonacci. That would be a nice little pausing area, especially because we had this previous lower move high here. I can see where we had also a previous lower or high over here. bunch of highs over here. So this is obviously a very big either support or resistance area for the British pound US dollar. So we'll see how momentum is there. If the euro US dollar is climbing on the dollar and the dollar is under pressure with a lot of other currencies, then it's very likely that should we get above $1.39.03 here, that $1.39.91 is very reachable. Just be cautious here. Now, if we sustain a trade above here, then I would say that we're probably going to be on track to get back up to this $1.41 area before we start to run into any serious resistance of any kind. All right, let's look at the US dollar Swiss. All right, no questions on the chat room so far, right, guys? Let's see, do we have any questions? No questions on the chat so far. Okay. Let's see, what do we got here? We got 2. All right. All right, so now we have the US dollar Swiss kind of in limbo. If the dollar index does maintain its posture where it's going to fall lower, irony is that the euro is up against the dollar, the pound is up against the dollar, but the US dollar Swiss is continuing to go higher. So I would use caution as far as being long. Key off of today's low. It's a higher move low after a higher move high. The trend is your friend. And as long as it maintains this slope, it's going to most likely continue to keep its momentum going. Remember, just because the pound and the euro are strong versus the dollar, it doesn't mean the Swiss has to be. But if we fall below this 91.94 area, it's very likely that we will be laying on this potential new move low of 91.47 right here. So this will be very critical in these two spots as far as downward pressure. Definitely below 91.47. I see this market definitely accelerating its break. Remember that we've been in a rally for the past month. However, it is a corrective rally. The overall trend has been negative for this market for a while. So we have to keep that in mind. I would use this low, the high from Friday, this higher move high, as our new base as far as resistance, as far as the longer term trend is concerned. Obviously, if we breach this downward sloping resistance, it confirms strength with the ability to most likely take out this 92.77 area and make higher move highs above 93 cents somewhere. This is a flight to quality currency, and this is what makes me think that the dollar index as well as the US dollar is only in a corrective mode right now. I think it's going to be hard to beat up the dollar in the long run when you have pressuring interest rates, and especially with the looming consensus that rates are, well, no matter what, they're going to go higher eventually one day, but the market is commanding higher rates, and if interest rates are higher, that lays credence to strength for the US dollar. So, and also as far as flight to quality, the dollar, the Swiss, and the yen, which are flight to quality currencies, if the dollar is being beaten up by the major currencies in the dollar index, but it's strong here, that means that flight to quality is still a factor in the US dollar. So we're kind of not at an influx here. I would be very mindful of these levels here at 91.94 and 92.77 above here. Don't fight it because it's making higher move highs, just continuing the trend. Remember, the trend is your friend. Do not fight it. If you're going to look for a contrarian trade, you can utilize this trade that we had here on Friday. We did have, or excuse me, on Thursday, we did have a short-term sell signal right here. So coming off of this, this is a key level here. With this sell signal, it's a counter trend trade. Anything above this high, the high that was set on Thursday, would obviously cancel out the trade. As far as how far does it have to go with this trade, it doesn't have much movement for this one. We're looking for it to come back maybe to 91.47.44. So we're looking at maybe a digestive trade forming, possibly. I don't know if we can really muscle up a severe sell-off in the US dollar Swiss unless you get a really, really big breakout in the pound and the euro to the upside with other factors looming that could possibly hurt the dollar, meaning fundamental factors, certain type of news information that may come out. I'm not saying that anything will, but you never know. News comes out every day. So it would take, I think, something like that to impact this currency and actually make that situation happen. Since we're talking about the flight to quality Swiss, let's go to the US dollar JPY. So interestingly enough, the US dollar here is under pressure against the yen. We did have a sell signal here also on Thursday. So, and this one here is a bearish engulfing line. As far as how far can this one go, we're looking for a very tiny correction, and the problem with this one is that it's really already almost there. So can we go a little bit further? Sure, we can go down to probably about there. That's about the extreme, I would think, is right in this area. Now, if we do come down into this area, that also confirms a higher move high with a lower move low. That sets this market up for neutral. It doesn't necessarily make it a bear. We still have this market riding this upside trend. Notice that this comes right into this support area also. So I think as far as can it ride down in that area and play with lower move lows? Sure. It's only if it falls under this 109.71 area that I would become leery as far as any strength in the dollar versus the yen, because most likely should you get under this 109.71, you'll see an extended correction down towards this 108 half area. I'm not looking for that right now. I think that the sell signal here is already coming just shy of these targets into this range here, and this with this upward sloping support line holding this trend, which overall this isn't a bull market. It's been making higher move highs and higher move lows for a very long time. Now, could we have a correction like we had back here at the end of March going into the end of April? Of course we can. We could easily have a correction down like something like that. But should we do that, then what does that do? It puts us basically down to this 108 half area where there's all kinds of support. So could we have a sell-off in the US dollar yen? I think it's very, very possible. This is ironically one of the currencies that usually when the dollar is weak versus other currencies, we see strength. So I would use caution with this one. It's very likely that we see a snap back towards resistance, and definitely should we get above the high that was set last Thursday here around 111.64, use caution. Being short above here, I think you're trying to jump in front of a freight train, trying to beat a trend that definitely has been in place for a very long time, and instead of looking for reasons to sell this market, I would look for opportunities to buy actually. So that's where we're at right now. Short term, this trade has almost run its gamut as far as the sell signal, so don't try and chase it, but possibly look for a good buying opportunity here, because then you can a low risk buy would be somewhere in this area with 109.71 being your risk level or just below that. Because anything below there, even if it doesn't really sell off in a big way, it's likely to get choppy and just go sideways, and then I would wait for once again a reason to buy with either a breakout to the upside or having maintained along in somewhere in that area. Now, Australian dollar, US dollar, this is a whole nother ball of wax. This market has a lot of trouble. There's a lot of geopolitical tensions, there's a lot of issues with China, there's a lot of supply issues with the fact that they're not able to unload their raw commodities to China right now. There's also new tariffs being put on the Australian dollar, the Australian people from China, making all kinds of trade with them, which Australia's #1 trade partner is China, and especially supplying raw goods and raw materials. And since that is being I wouldn't say necessarily manipulated, but definitely controlled and limited, that's going to impact Australia in a big way. They also have new lockdown measures in place, so whereas we're doing well in the US and all over certain parts of the world, we know that I guess the pandemic is still impacting them. I think that you can see how this new lower move high was rejected today, that this is the key level. If we get above here, it doesn't make me a bull. All that means is that I think we could chop around and maybe build a wide base. However, right now, as far as I'm concerned, that is well out of the stem of possibility, just because of the stuff that's going on politically and economically with their country and China. So we have downward sloping resistance coming into these areas. Could we see it still a spike high? Absolutely we could, but I do not believe that's going to happen, at least not in the short-term future. Should we get above this high from today, it's still critical to get above 61.19. Only above there do I see as pressing resistance and make a challenge of this downward sloping resistance line that's coming down from the past multi-month highs. So very weak with Australian dollar, US dollar. New Zealand dollar, US dollar isn't necessarily the same thing. As you can see that this market, which is coming off of a higher move low, not a lower move low. Let's go back to the Australian dollar, US dollar, just so you can see this clearly. We made a lower move low last week on Thursday. Okay, now we're coming off of a lower move high. This market definitely maintains a bearish trend. New Zealand dollar, US dollar, however, is coming off of a higher move low after a lower move high, and today actually came above this. So we've been talking about this in our other videos. If you were paying attention, or if to our videos last week, and if you have missed them, you can go back and check them. We've been talking about we have divergence in New Zealand dollar and Australian dollar, meaning that as a trade zone, they do have a lot of similarities and trends and movements on certain days and weekly bases. However, now we have a divergence because of the weakness in Australian dollar, period. This is versus all currencies. I see Australian dollar having weakness versus the dollar, versus New Zealand dollar, the pound, the euro, what have it, you name it. It is right now at the precipice of probably having a trend weaker that will extend and last for at least the next 6 to 8 months, possibly even a year or more. This is I don't take this lightly, because unless we see any radical shift in the change of the Chinese and their policies, which right now it seems like they're very aggressive and making it quite clear what their plans are for the future, and especially when it comes to Taiwan and some other things. So they're limiting their interactions with Australia also because of the fact that Australia has a big tie to the U.S. and the West. So that is big for them. It's strategically, I think China's backing off of them and putting them under a little bit of a stranglehold, if you will. So we'll see how this pans out, but that's good for New Zealand. It's meaning that since we made this higher move low and a higher move high, this market's in neutral, to say the least. As far as being a bear, not necessarily. And as long as there's dollar weakness versus other currencies, it's very likely to see New Zealand dollar keep on trying to probe through resistance versus test support. So we'll see how that manifests over the next couple of days and into next week. US dollar Canada, it's ironic how the dollar is so weak versus the pound and the euro right now. But with the Canada, it's been maintaining this upside trend for the past month. It bottomed out at the beginning of June, and boom, it looked like it was just a short-term correction, and maybe it still is, but today we made a higher move high after a higher move low, making this, or excuse me, here's the higher move low that was set today. So you can see we made this lower move high, we made a higher move low, putting this market in neutral. Now we have come up, we made this lower move high, made a higher move low, keeping the neutrality going on, and then boom, we take this out. So now we have a higher move high after this higher move low down here, which becomes the key base for support. Only if we fall below $1.2251 do I see this market going back and maintaining its overall bear trend, which it has been in for like the past 14, 16 months. And I do not make this statement lightly. The politics and things that are going on between the U.S. and Canada, I don't see that shaping up and getting any better, meaning that you're most likely going to see dollar strength continuing against the Canadian dollar for quite some time now. Now it has a very aggressive vertical slope. I would use caution with that one. However, especially off of these most recent lows, if we could keep the low of today in place, it's not crazy to assume that it could keep on drifting up towards this area. Definitely get above the $24.88 and get back up to $1.26, maybe even $1.27 over the course of the next month or so. So we'll see how that manifests. We'll take one last look at the euro real quick. As you can see, boom, the euro is falling on support. What's going on here? If it's actually going to be a bull, it needs to come up here if the dollar index is to maintain that correction. If this starts to continue to go this way, well, then that changes everything for the dollar index and the direction that it will be going. So remember, the dollar index had spiked a high. It has a short-term sell signal. However, with euro dollar weakness, it could be in jeopardy very, very quickly. So we're taking this sell signal from Friday very lightly when it comes to the dollar index as far as any type of correction British pound US dollar is also doing the same thing, maintaining its bearish trend. We'll see how that moves forward into the rest of the week. So let's get to the cryptocurrency guys for a little bit. Bitcoin has been wedging. This one here, there's all kinds of talk about this and that in the whole cryptocurrency industry. And to be quite honest with you, I think it's some very interesting times for the whole space. And I think what you're seeing now is not just necessarily a basing, could be a pause before it actually goes and continues this overall trend lower. But the interesting thing I think that's going on now is that the trading is getting very, very tight in this area. So is it that support has found its base here at around 28,000, and 38,000 seems to be a good resistance area. I don't think that that's really the case. I think it's just all the news that has rifled through the cryptocurrency industry over the past couple of weeks has definitely pulled not necessarily the interest, but people are definitely waiting to see what kind of more either restrictions are or loose restrictions are unleashed around the world. We have certain countries now that are completely embracing the whole cryptocurrency industry. And then we have others that are like, yeah, this isn't happening. One thing I think that everyone that's involved in the crypto market has to be mindful of is quantum computing. As that becomes mainstream, it may put a kibosh on a lot of the cryptocurrency business and industry. Not to say that certain technologies that have now come out of the blockchain technology and all these different cryptocurrencies isn't stuff that can maintain itself. We'll get into that as we move through these different cryptocurrencies. So right now we're looking for a breakout. Otherwise, it's just a choppy trade here in between these levels, between 28,000 and basically 38, 40,000. There's no sense of direction. It's obviously been this way for since going back into the end of May. We've been going into this little range here. So we have 2 months of consolidation. Does that mean that that's what we're doing and it's going to find support and then make a breakout to the upside? Could be, and we could also still see yet another slide lower. This will be indicative of what will happen with most of the other cryptocurrencies. I think that definitely if we have another break below this 28,000, basically 27,000 for sure, that you're going to see a lot of profit taking and selling in all of the cryptocurrencies. Anyone that's along with making it that's up money most likely is going to start to nibble away if it starts to fall apart in those areas. Now let's look at the Ethereum US dollar. This one here, we're definitely pretty bullish. We've been making higher move highs and higher move lows. So as Bitcoin itself is going sideways, we see strength in the Ethereum network. We've broken out, I would say, over the past couple days, confirming for sure that the strength is here. It's not just a wide sloppy range trade. Will it be maintained? Who knows? But as far as support, I would say as long as this market's above 2023, so basically $2,000, Ethereum has a good longer term outlook as far as getting back up towards this, I would say 3,000 to even up 3,500 area. Are we going all the way back up into the 4,000s? I would take it easy on that one. It's going to require a breakout to the upside with Bitcoin to help move that along. Once again, this has technology that in the long run has uses, and even if cryptocurrencies is replaced by something even newer, especially because quantum computing is going to disrupt a lot of things in the crypto space as well, besides the regulatory issues with sovereign nations. But if you are trading this and you are still having a big faith in it, you might as well be mindful of what's going on. So as far as upside potential, I think it is definitely there. Be very mindful if we fall below 2,000 again. Odds are we will be riding support and hit probably around the 1750 again before we see a bounce. Should we get below 1750 and hold it, that means most likely that Bitcoin is trading in the lower 28s or upper 28,000 level, like 27, 28,000. Excuse me. So, and I don't see it really getting below any of these areas here unless you have a big sell-off in Bitcoin as well, which would be dragging the whole crypto space down. So, but outside of that, this one is looking to make a breakout to the upside. Maybe it's going to take Ethereum and a couple other currencies to lift Bitcoin. Now let's look at XMR US dollar. This one here looks more like Bitcoin. It's going sideways. Good value for this technology and stuff. Does it have growth potential? I could see it going back up towards $400 eventually, breaking out to the upside. Should we get a lift in Bitcoin and Ethereum and all the other major cryptocurrencies? If they continue to remain under pressure, I don't see Monero selling off too extreme. I would use caution though, because should we fall below this area here around 173, that would show that there's not systemic weakness going on in this cryptocurrency, but odds are you would have a little bit longer of a period of time before you start to see a real turnaround in this market to the upside. So the bears are in control of this one. This one is not making higher move highs and higher move lows. It's wedging. It does not have the strength of Ethereum, but then the technology is not as in demand as Ethereum, or probably as embraced as Ethereum is. However, Monero is very viable with its technology. I think one of the things that really messes with Monero is the fact that there are other options out there that are in the crypto space that can serve the same function as far as for how the technology is utilized. And that also caps its overall long-term value as well. So do we see this going higher and have a higher value? Yes. Should there be no crypto collapse, then yes, I think that most likely Monero has a really good solid chance of getting up towards 400 to 440. By the way, we are long all the cryptocurrencies that we are talking about. We are looking to sell out of them though. Here's another dog, the Doge. This is one where I really don't like the expected potential for longevity with the technology. I think that it's a pet rock that has it seen its day. Could it have another run up? Oh, absolutely it could. There's a lot of people that are hanging on to this one, still want to become Dogecoin billionaires. So could it still happen? This thing goes all the way up to, you know, whoops, we got the wrong one. We got Dog USD, not Doge. DOGE USD. There we go. Looks the same pretty much. All right, so Dogecoin here. I think that above 30 cents, and I know a lot of people that were looking to buy it at 30 cents. So any of those people who are just saying, hey, you know what, I think I'm going to give it a shot, I think there's a lot of them out there. But I would expect to see a lot of selling pressure from 40 up to 50 cents. Does that mean that this thing can't go to $1 million? Anything can happen, that's for sure. But I would use caution as far as staking any equity in this. Any gains that you see, I would hope that you have the sense to take at least some profits, or get out your original investment, and then whatever you have left, let that be whatever nature takes its course on. The biggest problem I have with the Dogecoin is not just the sensationalized trade driven by social media and, you know, just inept and inexperienced investors and traders. It's just the technology factor, is that there's no real reason from anyone that I've talked to in the crypto space that are involved in many levels, even at the exchange level, where they believe that the technology will truly be embraced by users around the globe. And that eventually becomes an issue as far as overall value. So does that mean that Dogecoin couldn't still get up to $100, $200, $500, $1,000? Absolutely not. It does not mean that at all. But as far as the likelihood and sustainability of it getting up to levels like that, well, that's a whole nother story. So, but you never know. Right now you have all these people that are just hanging on, and it's a virtual, you know, it's a gamble. This one's a gamble, so I would make sure that you treat Dogecoin as a gamble when it comes to whether you're investing investing for the long haul, or just looking to scalp around and trade this. I think that the trading aspect and being mindful of how much you put into it is a good idea. As far as the trend, it's making lower move lows and lower move highs, so it is a bear. Until we see a higher move high after a lower move low, we don't have any reason to think that this thing is going to have any strength. However, I do believe you have a lot of people that have interest in, at the very least, buying it somewhere around this level, or 30 cents. And once again, I think you have a lot of reason for people to sell at 40 to 50 cents, that where a lot of people are looking for that quick scalp, like let's make a nickel to 10 cents on this Dogecoin, and that will be what the volume of trading is going to do. Which also, when you have that messes with the mechanism as far as liquidity. So as far as you know where you're buying and selling is going to come in, it's going to come in between that dime area right there. So we don't have any questions about the cryptocurrencies here. Make sure that you guys have subscribed to our YouTube and Twitch channel if you have not, and also don't forget to pass this stuff on to your friends. Let's see, we're going to take a look at a couple more markets here. Let me just set up a chart here and get things going here. Give me 1 second. And now I have to do something over here. Okay. All right, so we are now here at 11, just after 11 o'clock Chicago time, seeing where the markets are acting and how they're behaving. So we're going to do another quick flyby. So for all you guys that came in late, dollar index had a sell signal on Friday. We're looking for it to come down towards this area right here as an extreme. That doesn't mean that it's not going to fall apart and fail. Right now, when we look at the major players in the dollar index, like the euro US dollar, look at this, it's heading towards the lows set from last Thursday. So what does that mean? It means that short-term sell signal, counter trend trading signal, that's why you're always careful with counter trend signals, most likely will fail, meaning dollar strength. So that has the euro, instead of coming up towards this area that we were looking here as far as upside correction potential, we are looking at lower move lows, which will take us most likely down towards this $1.17.5 before we start to really see any major support. And it's very likely that we could see a nice little pause in that little area there. All right, now let's look at the British pound, US dollar. Same thing is going on here. We are near the lows of the day after making this lower move spike high. I think we are in danger of testing more support over the rest of the session and going into the new week. And let's see what happens. But $1.3730, a failure here has us hitting this $1.36.5 in a heartbeat, making lower move lows and lower move highs along the way, keeping that bear trend intact. So we'll see how that happens. And we do have divergence, remember, because we have the US dollar Swiss. This is probably why we have the continued strength here, maintaining this trend higher, is because now we have all this weakness going on with the euro and also the pound after trying to show a big show of strength, which means that we're probably going to see resistance get battered again, see that 92.77 area get taken out right up here, and see this market probably make a nice run towards 93.5, even up to 94 even, before it runs out of gas. US dollar JPY, this is another one that aims to please. I think that because you have the dollar strength coming in, remember we had, this is our extreme target area down here. The trend is your friend. We did have a sell signal last week up here, but it's pretty much almost hit it, and where the target is, which is $1.1042, is right at this last higher move low. I think that the strength is there, and we're going to see US dollar JPY challenging 111.64 within the next couple of days, making a play for 112.5 up to 113 even over the next course of the next week or two. Then we have Australian dollar, US dollar. Remember, we ad nauseum spoke of the weakness here. This one, look out below. I think that no matter what, as every time there's a lower move high swing like this after a couple days showing strength, boom, it's going to fall back on support and make newer move lows. Overall, the trend, I think, for the Australian dollar versus most currencies is now an official bear, and it's been on terror versus a lot of currencies, especially the dollar, for the last 14 to 16 months. And it is over as far as I'm concerned, unless we see an overall change in direction with China. But after that speech that their supreme leader put out about the 100-year anniversary and the plan for China world domination, I don't see how they're not going to keep on messing with Australia, especially because they're trying to restrict what they do with the United States. Very political and going to impact that currency. New Zealand dollar, US dollar is also supporting this theory by the divergence it's had, coming off of a higher move low after a lower move high and making a higher move high once again today. As you can see, it's not hitting support like the other ones are. The other ones are trying to make new lows or are on the day. This one's holding. So, and I think that it's not that the New Zealand dollar may become a bull versus the dollar. I just don't think it has the capacity to sell off versus the dollar like the other ones do, because there's no reason for it to have that systemic weakness. U.S. dollar Canada is also helping to prove this dollar strength, and we'll go back to the cryptocurrencies for one last round too to show you what's going on with the weakness there. So U.S. dollar Canada strength is we're hovering right below these highs. Are we going to take it out again today? Well, anything can happen. We still have a lot of time left on today's trade in the U.S. However, I think whether it's today or tomorrow, it is going to continue to pressure resistance as dollar strength is coming back into the market. And we'll see how the dollar index closes today. Should it take out that previous high, proving if a reversal of fortune and the dollar bull being here, it doesn't mean we're going to have an explosive dollar bull, but I think it's very likely that we will have maintenance of that. Speaking of dollar bull, we'll go to the futures real quick, which are always in delay by law. There's nothing we can do about that one. Okay. All right, close that. All right. So we have the 30-year Treasury bond futures, which are one of the biggest influences in currency pricing, this in the 10-year. So as you can see, on July 2nd, on Friday, the market was a little bit higher. It's chopping around here. However, you got to be mindful of this. Should we start to see this Treasury bond market get down to 159, 158 area, it's going to impact the currency prices, especially for the dollar. So let's see what it's actually doing right now. One of the reasons, once again, is that interest rates are a big function of commodity price or dollar pricing. Okay, so we have a big rally going on in the, wow, this is huge, 162. Okay, so right now the Treasury bonds are trading up in this area right up here. That is polarizing for me. It's going to be interesting to see what's going on. I think it's going to be a head fake in the bonds. Since we have this dollar rally going on and a bond rally going on, that tells me that we have flight to quality going on, where usually the only time you see this is during a time of war, where we have the Swiss and the yen, which are flight to quality currencies. They're not doing that. Dollar is being bought. Treasury bonds are being bought. 10-year notes are being bought. That means that there's something coming up and brewing. The markets seem to be jittery about something, and that means that we're looking to maintain these trends that we are developing right now. And if you are a dollar bear overall, I would use caution, because right now it seems that the factors are coming into the market that are starting to really show that dollar strength may really be here for the next, not just couple days or a couple weeks, but maybe the next few months, as maybe even into the end of the third and fourth quarters. BTC USD, because of dollar strength coming into the market, that may be another thing why Bitcoin and cryptocurrencies are starting to lose a little bit of luster, as major players are probably more involved with the major markets and not the crypto markets right now, causing a little bit of a, I would say, liquidity issue. We can go back to let's see, we'll pull up another one here, Bitcoin, from our navigation bar, and let's see what the volume looks like here, because we have that still up. So yeah, you can see the volume has been dropping since we had these last bottoming areas here. So as far as overall average volume dropping in the trading of Bitcoin, that tells me that the bigger players, the whales, they're not necessarily on the sidelines, but they're not very active in the crypto space right now. They're more focused on the major markets. And let's see, ETHUSD. This is also, which would help with this one, and we'll follow this as the week unfolds. Excuse me. But that might be a reason, with dollar strength coming into the market versus all these major currencies. It may make resistance become a lot stronger when it comes to the Ethereum that we're looking to continue to rally. And then we also have the XMR US dollar. That could be another reason why this one is starting to stall, because of the if you look at the actual average true range that we've been looking at with these markets, they're getting tighter and tighter. That means you have less activity going on and the likelihood of more vacuum moves. So I would be very cautious with these. Same thing, especially when you look at the Doge. Everything here on the platform is showing that volumes are dropping and ranges are also shrinking. So could it be a summertime effect? Yeah, it could be. Does it mean that all the kids have no interest in cryptos? No. I just think that the whales and the people who really could move this market that come by coming in and buying especially are on the sidelines right now, and especially once again with all this stuff with quantum computing coming out about what it can do to the crypto space, especially meaning render a lot of these technologies useless. That is a factor I think that's starting to weigh on the more experienced trader and investor. We'll see what happens. Anything can, that's for sure. So we'll end with one last look at the Euro US dollar. Oh wow, it is making new lows as we speak. So here we got this one falling apart, and we'll see if it gets back down to this 117.5 as it makes new lows. Remember to please, if you haven't done so, subscribe to our YouTube channel, Forex Trading Unlocked, and check out all the different playlists with videos from, we have everything from Forex, cryptocurrencies, even options. Check out our playlist, especially their one for e-option. It shows you our Nadex has past webinars that we have done. And then also don't forget to subscribe on Twitch if you're a Twitch follower or a Twitch user. We enjoy that community. You guys have been great as far as interacting with us and helping us grow and get the word out about Forex Trading Unlocked. We've updated a whole bunch of stuff as far as our Twitch page, so you can see how that looks. In fact, I'll pull it up right here, and here you go. Here is our Twitch channel where it has about stuff, and it has their scheduling, it has our high probable Japanese candlestick patterns. We have a lot of Twitch users that have actually purchased and read the book on Kindle versions, and you can also interact with a bunch of other things with our Twitch channel as well. A lot of useful information just like there is on our regular YouTube channel, and then of course at forex-trading-unlocked.com. That's where you can also find all kinds of fast information, useful information, all free. You don't need a login. You don't get bombarded with all kinds of selling materials and what have you, promotional materials. But we are going to give you one last promotion. Please check out the book High Probable Japanese Candlestick Patterns after you've subscribed to our YouTube and Twitch channels, Forex Trading Unlocked. And remember, you can get the book on paperback and Kindle versions. So leave your comments on our video sections, and please, pass this on to your friends and share our videos with them and help us grow our community and interact with us too, because any questions or comments you leave on YouTube and Twitch with our videos, we do respond to them as soon as possible, and we a lot of times incorporate them into our next video. So thanks again. I'm Teddy Keckstedt from Forex Trading Unlocked. You have a wonderful trading week as we now begin the third quarter of 2021. Can you believe it? We had a couple days right before the holiday, but now we're actually kicking it off. So good luck with everything. We'll see you guys soon, and we might be doing a live video interactive presentation tonight around 10 o'clock Central Standard Time, especially because we have all these interesting new moves happening as the other markets are closed around the world, and the U.S. seems to quietly want to push the trend.